Dow opening down over 2%. Philip Dow is back with us. He's the Director of Equity Strategy at RBC in Minneapolis. Also, Todd Colvin joining me with MF Global from the CME. And Todd, I want to start off with you. We are opening down over 2% on the Dow. What are you going to be looking for in the selling this morning?
Well, Betty, I think it all stems from what's been going on in Europe, and it's starting to bleed into risks in the U.S., i.e. our banking system, and how our Fed is now connected to the ECB with an open swap line to provide dollar liquidity to European banks. So I think our stocks right now are recognizing that we do have some risk here, and we have some exposure, and we're going to see stocks continue lower. Probably we could see S&P in the 900 handle in the coming days, and that I think we'll start to see the selling slow at that point and probably stabilize for a period.
Right. Phil, let me bring you in, because why is it that now people are starting to realize, oh, we have some link between the U.S. and Europe. Oh, you know, there's some banking links between the two. Beforehand, when we were talking about Greece, we were talking about Spain, everyone kept saying to us, look, you know, this is an isolated situation. What's going on in Europe is not going to affect us here. What's changed?
Well, I think the flash crash changed it all. We're interrelated in a lot of ways, and this is part of globalism. There's uncertainty, there's mass confusion, and there's real fear right now, and whenever that happens, you see a decline. So I don't think it's anything particularly new, except that it's on a global basis right now. We're no longer isolated from the world.
Right.
Having said that, while we're tied at the hip to Europe in some ways, with, as your previous guest just mentioned, there's no evidence as of yet that this economic recovery is going to slow down a pace, or that the operating leverage we enjoy right now with a little bit better revenues against a declining cost basis is not going to drive earnings higher. So,
Todd,
you know, there's no evidence yet. My guess is I understand why they're selling. There's uncertainty right now.
Okay, well, Todd, I mean, what do you think about that?
I completely agree. I think the markets typically will front run the reality, and that is the markets will err on the side of caution, and we see it with lower bond yields, and we'll see it with lower equity levels like we're seeing, because at the end of the day, when uncertainty is king, return of capital is more important than return on capital, and I think that we'll continue to see that for the coming weeks, at least until there's some sort of resolution, and that means big changes in the banking system in Europe, not just bailout money. It means spending cuts and whatnot over in Europe. So
right, structural change. Okay, Todd, thanks so much. Todd Colvin at the CME, and also Phil Dow, thanks for joining us of RBC.